To celebrate what will hopefully in a few months' time be Hex on 2 chains, I thought I'd go through 6 investing lessons that Hexicans understand better than anyone else. What I believe Hexicans understand better than any other type of investors out there is that delaying gratification pays. And you really see it with Hex, where if you stake for 5,555 days, which is a little over 15 years, well, you'd be getting a return of around 40.3%. APY. Whereas, on the other hand, if you're just staking for 1 year or 365 days, well, the APY is around 12.3%. So, with longer paying better, Hex is the best illustration of the benefits of delaying gratification. So for Hexicans who have tracked the price charts over time, they'll be well aware that whenever there's a dip, that's an opportunity to buy, and that ultimately volatility can be your friend. So, with Hex, we've had dips exceeding 81%, 72%, and we've had a high exceeding 86%. So these have been among the best opportunities for Hexicans to ultimately accumulate more Hex. What a lot of people who don't invest in Hex won't realize is because the trading volume is so low, there's a lot more price volatility than with the likes of Bitcoin or Ethereum. And by having a lower trading volume, it's allowed Hex to ultimately pump by 1,000,000% in 623 days during the bull market. So the risk with volatility is, and it must be noted for Hex investors or investors in anything else with low trading volumes, as while there might be greater scope for bigger pumps during bull markets, during bear markets, there is much higher downside risk, and steeper dips should be expected. The third lesson all Hexicans would be well aware of is that trading is for losers. So the fundamental problem with trading, and this concept applies across both crypto and stocks, is that the only winner at the end of the day is the exchanges. So as a trader, the more you trade, the more you're going to be paying over time in fees. And if you're making a profit, you're going to be taxed on it. So generally holding an appreciating asset and only selling when you require profits for a purposeful reason is a more prudent approach to investing. So for the fourth point, so there is actually free money in crypto. So what do I mean by this exactly? So in Hex as we speak, for those currently staking Hex, people can mint Hedron against their Hex stakes, which adds value to their Hex because it means for those long-term stakers, they'll firstly be able to trade their staked Hex if they choose, but more importantly with Hedron, it allows people before their Hex stakes conclude to then claim their Hedron, which if Hex continues to grow in adoption, has the scope to be a valuable cryptocurrency in its own right, due to how it builds on top of Hex to allow stakers to mint and borrow Hedron tokens against their active Hex stakes. The next free money opportunity with Hex is Pulse Chain, which will see Hex holders and stakers receive a copy of all their Hex on the Pulse Chain, effectively doubling your stack. Additionally, any Ethereum ERC20 tokens or NFTs you hold on the Ethereum blockchain will receive copies on the Pulse Chain, as Pulse Chain is a hard fork of Ethereum. So these free money opportunities, of course, are not just exclusive to Hex, with long-time Bitcoin holders and long-time Ethereum holders among those who have enjoyed similarly lucrative free money opportunities. And do note also with the Pulse Chain that anything you want copies of on Pulse Chain, you will need to store on either your software wallet or hardware wallet to receive those copies. So if they're on centralized exchanges, well, yeah, you're not going to get those copies, so do make sure of that. So both crypto investors and in particular Hexicans should be well aware that the best time to get into crypto is early. So that doesn't mean on day one of a project launching you need to FOMO in necessarily, as there are often dips after launch and sometimes steep declines, even with the most hyped projects, as we've seen with Internet Computer. But those who buy good projects in the early years, and you need to do your own research to determine if it's a good project, tend to be those greatest winners. So imagine buying Bitcoin for 9 cents in 2010. You could have got it for $13 in 2013, $430 in 2016, or $3,800 in 2019. Or a $7 Ethereum in 2016, an $83 Ethereum in 2018, or a $123 Ethereum in 2020. So in crypto, if it's a strong project, as long as you have a long time horizon and consider it likely that the project continues to receive increasing adoption over time, the most prudent move is getting in as soon as you can, as dips can never be assured. What has supercharged the growth of crypto adoption and valuations is the rampant inflation we see in fiat currency. So dollars are being devalued continually through ever-expanding debt creation. And the reported inflation figures, of course, don't accurately reflect what is happening in the real economy, with the limited basket of goods that are designed to only ever show low levels of inflation, rather than represent the price increases experienced by consumers. Then with shrinkflation and ever-cheapening choices of materials or ingredients used further hide the true story about the ever-diminishing buying power we have as consumers. Hex, I certainly believe, and I'm sure a lot of other Hexicans out there will agree, is one of the cryptocurrencies with an answer to inflation. So, with an inflation rate of 3.69% annually with Hex, you can beat the rate of inflation because less than 10% of Hex is staked. So Hex stakers average an APY of 38%, with those who stake for 5,555 days achieving the highest APY and potentially higher APYs than that. So what is unique with Hex is the T-share system when you stake. I might cover this in more depth in a future video, but in short, T-shares are a single number representing how much you staked, how long you staked for, and how early you staked. Those who stake more, stake longer, and stake earlier are those who get the highest T-share rates, and with it will receive the most interest for the period they stake. So T-shares allow Hexicans to beat Hex's 3.69% annual inflation rate and grow their stack, at least in Hex terms, at a rate you'll never be able to enjoy in the legacy banking system. The only question then with Hex to determine whether it is a viable investment or not comes down to how confident you are in adoption continuing to increase and whether the price per Hex will continue over time to appreciate, as high-yielding investments are often as effective as their ability to either maintain or appreciate in value. What Hexicans will be more acutely aware of than any other crypto investors is that Ethereum gas fees suck. So, as a Hexican, and each of these costs ultimately take away from your profits, but you're firstly buying Ethereum for gas, then you're paying a fee to move Ethereum to either your hardware or software wallet. If you decide as USDC is a more liquid trading pair for Hex, that you would like some, well, you've got a transaction fee for buying USDC. Then again, you're paying another transaction fee to move your USDC to your wallet. From there, you're paying ETH gas fees to convert your USDC or a portion of your Ethereum into Hex. Then you're paying an Ethereum gas fee to stake your Hex. And at the end of your stake, Ethereum gas fees need to be paid to end the stake. And if you want to ever convert your Hex back into fiat, you're going through the process of paying gas fees to convert your Hex into USDC or Ethereum, then paying a gas fee to transfer back onto an exchange. Then on the exchange, you're paying them a fee for converting your crypto back into fiat. So there's a lot of stages and charges involved. The biggest and worst when it comes to impacting your gains, of course, is the Ethereum gas fee. So to start a stake, the cost may be around $20, so that's reasonable enough. But then to end stake, the gas calculation as we speak is 2,310 times the number of days, plus 53,694. So in Gwei terms for a 5,555 day stake, that's 12,885,744 Gwei, or almost 0.13 of one Ethereum, which based on Ethereum's value today is a whopping $438.75. So with all these fees within Hex, it brings us back to the importance of staking lots, staking long, and staking early. And on the point of staking early, given there is a continuing daily increase in adoption of Hex, anyone getting in now, I would personally argue, is still getting in early. So for Hexicans out there, the best opportunity in the future is likely to be on the Pulse chain. So on Pulse chain, the key difference between that and Ethereum is at least you're not paying the exorbitant gas fees. So both to start a stake and then end a stake, we don't know exactly how much it's going to cost, nor do we know what the value of Pulse chain will be to be able to accurately say this is what the gas fees will be. But the expectation is certainly that gas fees will be substantially less, given there'll be a lot less network activity out of the gates for Pulse chain. So for most Hexicans, I would say that's probably going to be the better opportunity for staking your Hex, just because, again, your profits aren't really being cut into that much. But on Ethereum, of course, there's still going to be those great opportunities for whales if they can potentially get Hex at a slightly cheaper price than will be the case on Pulse chain. Just because, again, if you're staking that big amount and for a long period of time, you've really got that scope to make incredible profits over time. Again, assuming that the price of Hex either holds up or ideally grows into the future, which I personally predict will be the case, but of course, no one knows. Thanks for making it to the end, and if you enjoyed this video, make sure you like, subscribe, and hit the notification bell for future updates. And if you'd like more Hex, Pulse Chain, or Pulse X content, let me know in the comments section below and let me know what would interest you. And if you've got any questions around whether it's Hex, Pulse Chain, Pulse X, I'm happy to do my best to help you out as best I can. But yeah, anyway guys, see you in the next video.